What is up? Welcome back to another video. In this video, I'm going to be talking about the most popular ICT day trading strategy, the ICT Silver Bullet. Now, you guys love these videos on my channel. This is one of the most reliable ICT day trading strategies. So I'm going to be teaching you exactly how you're going to trade using the ICT Silver Bullet. All the ICT Silver Bullet is just a certain day trading strategy where if you follow the steps, you'll be able to enter into a trade. And yeah, it has a very high win rate. It's very easy to find the ICT Silver Bullet. So if you're a beginner or if you're an advanced trader and just want to get another strategy, then this is definitely the video for you. It is a very reliable strategy. So if you're in some drawdown or if you just want to take some nice and simple easy wins, then this is definitely the day trading strategy for you. So first of all, let's talk about what are the steps for the ICT Silver Bullet day trading strategy. Now, I will be going over today's price action. So as you can see, it is Thursday, the 21st of December. So this all happened today. And there's a very nice ICT potential entry that you could have got, which was the Silver Bullet long position, which I'm going to show you. So what is the criteria for the ICT Silver Bullet? Now, the first and most important thing is the time that you can trade the ICT Silver Bullet. Now, this has to be from 10 a.m. till 11 a.m. Okay, you cannot trade any other time. You can start trading the ICT Bullet at 9:50, but if you want to be 100% sure, then the ICT Silver Bullet trade is from 10 a.m. to 11 a.m. That is the morning Silver Bullet. Or if you want to trade the PM Silver Bullet, it is 2 p.m. till 3 p.m. Now you might be wondering, why do you have to trade at these times? Now, these are just the times that ICT has given us. So if you, after I show you the different steps to the strategy, and let's say you take the perfect trade, exact ICT Silver Bullet trade, but it is outside of the 10 a.m. to 11 a.m. macro, then you will just not be making any money, and the strategy will most likely fail. You might get the odd coincidence where the strategy might work, but excuse me, but overall the strategy will fail. So the first thing that you want to make sure is it is from 10 a.m. to 11 a.m. Okay, that is the time frame that we're going to looking at. Now, the second thing that you want to be waiting for when you trade the Silver Bullet is what you want to target. So you want to target opposing liquidity. So obviously, before you actually enter into any trades, you need to realize where your target is going to be, or whether it's going to be a buy or going to be a sell. So obviously, when you're day trading, you can open shorts and you can open longs, so you can make money if the market's going down, or you can make money if the market is going up. So as you can see, what I mean by targeting opposing liquidity, I mean that, let's say, from around 9:30 till 10 a.m., if we are trading down and we're trending downwards and we have taken out some sort of liquidity. So for example here, as you can see, we have took out this sell side liquidity. Now, all I mean by sell side liquidity is just where sell stops are lying in the market. If you're unfamiliar with liquidity, I have lots of videos on liquidity, so make sure you go and give those videos a look. But sell side liquidity, as you can see, has been swept in this instance. So where would our main target be? Our main target for this trade would be buy side liquidity, which is up here. Now, obviously, we'll most likely not hold the trade all the way up to buy side liquidity, but that doesn't matter as long as we can clearly see that a buy side liquidity has not been taken, sell side liquidity has been taken. Therefore, our Silver Bullet today will be a long. Okay, so I hope that's very clear. This is very important. We are trending down from 9:30 till 10 a.m. Therefore, we have took sell side liquidity. So the rule number one is to target opposing liquidity. So we have to target a liquidity that is opposite to where we are going. So we have took sell side, so we are going to go for buy side. Now, the second criteria to enter into the silver bullet is called displacement. Now, all displacement is just a big green or a big red candle that goes in a certain direction, okay? So let's play out the price action a bit. As you can see, in a second, we get a nice big bullish candle. Now this is what a displacement candle looks like, just a nice green or a nice blue candle that is going in the direction towards your liquidity. Now that is very important. It needs to be going in the direction towards the liquidity that you're targeting. So if this was a bearish displacement candle, it would be no use for us. It needs to be a nice bullish a nice bullish displacement candle, and that leads me nicely onto my next point, where it needs to also be a fair value gap. So you need to have a fair value gap. Now this is where you will enter into the trade, okay? So without a fair value gap, you cannot enter. Now there are different ways that you can use a fair value gap. And also, if you're unsure what a fair value gap is, all it is a three candle pattern where the first and the third candle do not touch. So as you can see here, we have this first candle here and this third candle here. They have a gap where the wicks or the bodies of the candle do not overlap. So that is called a fair value gap. Now, from this point to this point, this is your fair value gap. Now, what you can do, and what I would probably recommend you doing, because you'll see better results and better risk rewards over a longer period of time, is waiting for the candle to come back and to tap into your fair value gap. Now, what I mean by that is, let's say we have the fair value gap has been created. What some people would like to do is just enter into the position right here as soon as the fair value gap has been created. Now, you can do that. That is not a bad idea at all. But I personally, most of the time, like to wait for the fair value gap to come back into and price tap into this fair value gap. Now, this would be where I would enter. My stop loss would go at a swing low. I would make sure I'm using proper risk management, of course, not risking too much. Now, where would my take profit go? My first take profit here would just be this nice internal liquidity right here, which is buy side liquidity. Now you're probably wondering, why have you chose this liquidity? Now it is a nice one-to-one risk to reward, and as well as that, it is also the first point that we have any major liquidity. As you can see, it is a small swing high right here, so there's lots of liquidity resting here. So this would be my first take profit, and where I would move my stop loss to break even. So what I mean by that is, as soon as this gets hit like that, I would take profit there, and I would move my stop loss to break even. Then if I wanted to leave runners, I could target here, which is the next buy side liquidity. This is also could be a possible good spot for your first target, but me personally, I would just target right here just to be safe. And then if you wanted to, you could always leave a runner for the main buy side liquidity, but obviously that is most likely not always going to hit. But if you want to be sure, there we go, price action sweeps the second buy side liquidity and then comes down. So yeah, this is a perfect example of the ICT silver bullet. It's very simple, happens, you'll see it happen most of the days. Now, I've done lots of videos on the ICT silver bullet. I also day trade live every single day for free in a Discord. So if you want to check that out, click the link in the description. And I also have a trading course if you want to use my personal strategy that I day trade with every single day. So thanks for watching. I hope you enjoyed.